Hello, we're going to talk about individual 401ks. So why would you do an individual 401k? So this is for individuals that get compensation in the form of a 1099. It's common for individuals like consultants and real estate brokers. And why would you do this instead of a SEP? The reason is you can put you can get to the maximum deduction of $60,000 with less income. And let's talk a little bit more about this. One of the things we also want to talk about is you can make Roth contributions to an individual 401k. So that's after tax. And when you pull the money out in retirement, it's tax-free. And it is more complex. The individual 401k is more complex than a SEP IRA. So let's talk about some of the details. So an individual 401k has two components. There's number one, the 401k contributions, which sometimes you'll hear in the industry called employee deferrals. The limit for the 401k contributions is $22,500, and the catch-up, if you do the catch-up, if you're over 50, it's an additional $7,500. So if you're over 50 years of age and you contribute to an individual 401k, you can contribute $30,000 just in 401k contributions. Those contributions can be in the form of Roth, which is after tax and grow tax deferred. And then when you pull it out in retirement, it's tax-free, or pre-tax where you get the deduction and you pay taxes later when you pull it out as income. Just so you know, if you have $22,500 in income, you can contribute $22,500 to an individual 401k. So obviously with a SEP IRA, if you only had $22,500 of 1099 income, it's only going to be 25% of that. And the deadline to make the 401k contributions is 12/31. Let's continue to talk about the other component of an individual 401k. It is the non-elective or the profit-sharing contribution, or sometimes referred to as the employer contribution. Now, I will say that this contribution has nothing to do with profit-sharing. It's just a word that's commonly used. So now you can make the employer contribution, and it's usually the spread between the 401k contribution and the maximum. So if you contribute $22,500 as a 401k contribution, and you minus that from the maximum contribution, which is $66,000, that spread is $43,500. So so that's the other component of this to get you to the $66,000. So obviously, if you have $100,000 of income, you put in $22,500 or $30,000 if you're over 50, and then you do 25% of $100,000. That's $25,000 on top of it. Whereas with a SEP IRA, you'd only get $25,000 into that retirement plan. Some of the reasons you might not want to go with an individual 401k is the complexity, because if the balance is above $250,000, then you do have to file a 5500. There is a plan document that you need to create, and you need a third-party administrator to perform both of these functions. This video is designed for educational purposes only. Always consult a professional for any specific situations you are considering.